Question: I'm a W-2 employee and I also do some 1099 work. What tax deductions apply in this case? You know what that means. It's quad time. What is quad? Question, answer, and discussion. So here's the question in a little more detail. I'm a W-2 employee Monday through Friday and I also do some 1099 work, 2 weekends a month. What tax deductions apply in this case? This is actually a two-part question because we treat wages, W-2 wages, differently than self-employment income. And you'll see why. But let's address part one first. I'm a W-2 employee Monday through Friday. What tax deductions apply? Well, the Tax Cut and Jobs Act eliminated unreimbursed employee expense deductions for mostly all W-2 employees except certain groups. This may change in 2026, but for now, this applies. So unless you're in one of these groups, and you should know if you are, if not, ask your tax advisor, then do not deduct unreimbursed employee expenses or you'll get in trouble with the IRS. Okay? And make sure you know the definitions because the IRS they are very strict when it comes to the definitions of these particular exempt groups. So unless you're in one of those groups, then you're not going to be able to deduct unreimbursed employee expenses. Having said that, hopefully your employer is reimbursing you for out-of-pocket employee-related expenses, such as these items, because you as a W-2 employee will not be able to write these off. So the answer to this question, unfortunately, is 0. Let's go on to part 2. Remember, part 2 was I also do some 1099 work, 2 weekends a month. What tax deductions apply? This is the big distinction because 1099 income is considered business income. Okay, this is how the IRS treats 1099 income. You're no longer an employee. You are in business. You are self-employed. So the IRS treats this income differently. And as a business, you are entitled to legitimate business deductions. So here's the formula. You earn the income at 1099 level. Then you subtract your business expenses. And that is your net income. Now, there should be something called a profit motive, meaning you're in business to make money. And if you continually show that the IRS that you're not making money on this 1099 job, then the IRS is going to be skeptical and possibly audit you because you're not really creating a profit. So are you really in business? You don't want to do that. You want to make sure that you're showing profit consistently. And out of this net income, the IRS is going to take out the self-employment tax. So notice something important. They're not taking it out of your gross income. They're allowing you to take out the expenses and then taxing you on the net income. This is a huge distinction between W-2 employees and self-employed. So if you talk to your CPA or if you go on Google, they're going to give you some very generic business deductions, such as the ones listed here. The problem with this approach is that you're going to be limited in the deductions, and therefore your net income is going to be large, and therefore your self-employment tax is going to be large as well. And one of the things we got to know is what percentage of business use I'm using for example, my cell phone for. We need to be able to calculate this. Now, here's something that I want to tell you. We are not deducting the cost of the phone. We're deducting the cost of the phone service in this particular case. If this person was earning all their money from 1099, that's a different scenario. So just make sure that this example applies to the particular question. All right. So something else that I won't get into in this video because it's out of the scope of this question and video is something known as listed property. So the IRS has a very specific definition for this. And it has to do with mixed use. So if you have a computer that is used for business and used for personal, is it more used 50% or more for business than personal? And this will dictate how you depreciate that asset, or if it's even an asset. But like I said, I'm not going to get into it. You're welcome to read about this and learn more about it in the tax code. But in this video, I'm not really going to get into this. We're going to keep it a little bit simple. So again, what is the percentage of business use of my phone? Is it 10%, 33%? I don't know. How do I deduct it? Well, here's the formula. You got to know how many hours you've used for business for your 1099 work per week. And then you also have to calculate your waking hours. I know this sounds weird, but your waking hours basically are how many hours of the day are you awake. And they multiply that by 7 to get your waking hours per the week, because we're going to divide those 10 hours that you've used the phone per week divided by your total waking hours. And this is the calculation that's going to give you the percentage of business use of your cell phone. And then we know the rest of the time is personal use. Even if you're using it at your W-2 job, that's not business use. That's personal, according to the IRS. All right? So the total business use, based on this calculation, came out to 9.5%. So now we grab our phone bill and we look at it and it's $100. All right? So now I know that my tax deduction for my 1099 job is a total of $9.5 per month, or $114 per year. Okay? And you can use the same calculation for other monthly utilities, such as your internet bill. Please do not use this calculation for like business mileage, meals, travel expenses, because those require different calculations. All right, I had to make some assumptions because the person that provided the question didn't give me any numbers to go off of. So I'm going to assume this person is making $500 a weekend, right? This is 1099 self-employment income, or $1,000 a month. So here's the thing, right? Self-employment income, $1,000 a month. And then what are the business expenses? Well, in this particular case, we already calculated the cell phone business usage for $9.50. And I took the liberty of calculating some other expenses. This is all hypothetical, again, because the person didn't provide me any information. And this is basically what Google and your CPA will kind of provide, right? These generic deductions. So the business deduction in total per month is $50. So $1,000 minus $50 in business deductions, generic business deductions, comes out to $950 in net income per month. And then if you calculate the self-employment from the net income, which is 15.3%, you get $145 in self-employment tax per month, which doesn't sound like a lot until you multiply it by 12. Then you get $1,740 in self-employment tax per year. So to put that in perspective, it's going to take you 2 months. You basically work in 2 months for free just to pay the self-employment tax. Because if you're making $1,000 a month and you're paying almost $1,800 in self-employment tax, you see, you're basically working 2 months for free. So you don't really start making money till March. Why is that? Well, because when you use Google and your CPA, their job really is not to help you maximize your deductions, right? They're giving you very generic deductions. Whereas if you use DNT, we're going to maximize your business deductions and minimize your self-employment tax. How do we do that? We get nosy. We ask a lot of questions, okay? Because this is a custom approach. It's not generic deductions. So we're going to ask you, what type of work do you do? Is it a single location, multiple location? Where do you live? California and New York are very special cases. Do you live in Texas? Well, see, that's a different scenario. Do you own your vehicle? Do you use mass transit? Do you rent? Do you have dependents? Not pets, but dependents. And are you single, married? And all this helps us to maximize your deductions, right? And to minimize that self-employment tax. And as a result, in this example, we would be able to 10x reduce your self-employment tax. Meaning, instead of paying $1,744 in self-employment tax per year, you would only pay $174. Huge difference, right? So the answer to this question in part 2 is yes, because you have 1099 work, you can have these business deductions, right? And you have to calculate the percentage use, and you also have to show a profit, because if not, the IRS is going to say you're not really in business because you're not really making money, right? And here's the other thing I want to remind you. If you use generic deductions suggested by Google or your CPA, you're going to end up paying a lot in self-employment tax. So if you use TNT, we're going to maximize your tax deduction and minimize your self-employment tax using custom strategies, not generic ones. So that's a big difference. If you learned anything, you know what to do. You're smart. If you have a tax question, leave it in the comments below or DM us on Instagram @TherapyNotTaxes.